This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to recap the wild whipsaw, seesaw-like day in the market trade on Thursday. There is no shortage of topics to talk about after Thursday's session. We welcome in John Heinberg with Total Farm Marketing. John, good to catch up with you, sir. And I'm sure, like I am, probably worn out from watching these markets today. Just a kind of a tale of the beginning and the end, totally different from where we started the day to where we ended things up, John.
Yeah, it's just another product of what money flow can do, and so how sentiment can quickly change during the course of the day. Obviously, we had that weakness this morning tied to those outside markets after the inflation print came out. Again, showing that core inflation running strong, which I don't think surprises anybody. Stock market and the equity markets were down hard off of that information. The crude oil was down, hot dollar was higher. Just probably locking in another decent sized rate hike by the Fed. But then some reason about mid-morning today, the markets just turned corner and climbed. We saw the wheat market kind of take off on some of that Ukraine news in terms of what's going on with Russia. And that just spilled into the grain markets across the board, as well as the rest of the markets held in there really, really well today, to give us that positive finish on the grains. So, again, money flow is a big factor, and we just saw the sentiment change today. And, for the better, for the worse, I'm not sure, but we'll find out in the long haul, in terms of how this market wants to play out.
Yeah, it seemed like, Wednesday we had the market headlines focused on supply and demand with the WASDE. Then we had them focused on the macros and recession fears. And then by mid-morning, as you alluded to, it was back on the supply and demand fundamentals once again. John, I want to back up to Wednesday and the WASDE report a little bit. Just get your thoughts on those numbers that we saw. Nothing felt like it was super, surprising to me outside of maybe that bean yield coming down below 50. I just feel like that 50 mark is kind of the quote unquote psychological level in soybeans, John.
No, agreed with you 100% there. That was the surprise of the report, was that soybean yield. The market was anticipating it to go up a tick, and mentally I kind of was at the same time. Talking to a lot of producers, at least that I work with, they were talking about how the beans are a little better than they thought they were. So it wouldn't have surprised me if that yield went up a little bit. But again, some of those areas that were dealing with the difficult weather, the dry conditions, they obviously outweighed. We saw that on the state-by-state breakdown, in terms of those yields. So that was the surprise of the market. That takes about 60 million plus off the pile. The USDA found 30 million bushels the other day, found another 30 million bushels off the reduced demand on that report yesterday. So we kind of balance it out, and that carry out at 200 million bushels stays on the tight side and keeps this market supported. Now, we probably would have rallied even harder yesterday and may even have more strength on the follow through today, but they did still find a way to take some of that lost production from the United States as well as a little bit more and put it onto that Brazilian total, raising that crop up to the 152 mark that I know the market's been talking about, but the USDA made that change, keeping those global supplies on the increase. And that's probably what limited, just plus the psychological $14 barrier yesterday. So on the corn side, nothing major there. Again, got the yield cut like the market was expecting, basically within a tenth of a bushel. Saw the demand cuts that we thought we would see. We did see carryout go up a little bit, but we're still under 1.2. Still keeps the supply tight. Maybe now the corn market just stays a little bit more range bound with a bias for higher based on maybe what the wheat market wants to do. So that's a quick reflection of those numbers in my mind. A little bit negative for corn, definitely friendly for beans. Wheat numbers were pretty much in line, maybe a touch negative just for that little heavier carryout projection due to the demand concerns.
Well, and the demand concerns, 2 days in a row now, China and unknown have come in to buy soybeans. So I found that rather interesting. I'd love your thoughts on that, just because, as you alluded to, our demand has been sluggish. Our exports have been sluggish, pretty much across the board. Beans have maybe been the best out of the three, corn, wheat, beans, but I'm just interested to see China stepping back in here 2 days in a row with fairly sizable bean purchases.
Yes, those are two really nice pickups here. 526,000 yesterday, another 400,000 plus combined with that unknown destination sale this morning. That's pushing what 40 million bushels in 2 days here now. So, it's kind of impressive seeing that. And again, probably just puts a little bit of a floor under this last low in this market. Especially with that yield cut, and you see demand kick in. That kind of tells you, hey, this is a natural buying point in here that'll keep this bean market supported. Now, the key is still going to be getting them shipped. They need
Hmm.
beans over there. We're continuing to hear chatter of how soybean meal supplies are low. Their crush margins are friendly. They just need to get the beans there. Now, the Mississippi River still continues to be an issue, at least in terms of moving beans to the Gulf at the pace we need it to. So that's still going to be the big numbers to watch are those export inspections. So nice little jump in those this week on Tuesday's numbers here. So we'll see if that continues. Tomorrow we'll get the next round of export sales numbers delayed a week because of the Columbus Day holiday, or delayed a day, excuse me. So we'll see how that kind of plays out. But at least it's nice to see some business picking up here when we hit that low from just a couple days ago.
Well, and with the river issues, I wonder logistically how much we could maybe shift to the PNW, but then you throw in a potential rail strike on the table again, and that could get blown out of the water too, even if it's logistically possible. So, a lot of concerns there. But I made this comment on yesterday's show, John. Despite all of the different factors swirling around this trade, $7 corn, $14 beans on the board during harvest,
Mm-hmm.
that just feels like something that's not, that's rather unusual. So if I'm a farmer looking at that, thinking about protecting my downside risk, I mean, those are some pretty lofty price levels here at a time where we're traditionally sinking lower during harvest.
That's the thing you still got to keep in front of you as a producer right now. You got the combine rolling, and you're going to get some of the best prices you've seen historically for both corn and beans in this window. Now we're seeing the basis is starting to move a little bit, somewhat that tied to the river, especially in that regard. But if you're going to move bushels, let's say you want to capture maybe a little better basis window into the spring and fall, in the spring, later in the winter, make sure you're keeping a floor somehow underneath that bin. It's going to be a very key part of this in terms of managing your risk. As prices go higher, your downside risk continues to grow. Using put strategies, whether they're just safety valves and not having a lot of cost to them, but at least knowing you got a price protected if this thing were to roll over. We just saw it this morning, how quickly things turn negative just based off of the outside influences. What if things really do fall apart in terms of the economy, in terms of the equity markets or the crude oil market due to a recession type play that's even more driven in place? That's going to bring these prices down. So the last thing you need as a producer, especially with the input costs where it is to say, hey, I'm going to capture some advantages down the road and watch that deteriorate away from you. So make sure you're keeping that floor underneath somehow to protect yourself in this window and on those stored bushels, especially those stored bushels.
John, this wheat market, you mentioned Russia, Ukraine. I know President Putin coming out on Thursday and, sending his list of concerns, we'll call it, to the United Nations about the grain deal. There's not a lot of optimism that's going to get renewed here when it is up. So thinking about that, thinking about the dryness in the southern plains and the issues in Argentina with their wheat crop, I've heard from a few folks who think that wheat should be and needs to be the upside leader here in this grain trade. What are your thoughts on that as you think about the wheat market? You look at the charts, you look at all the fundamentals here. I mean, should wheat realistically be and can it be the upside leader here as we move into the end of the year?
If we want a big push that's going to drag corn higher, that might be what happens. This is going to be another move like we saw just recently in the wheat market when we get a bit of a breakout to the upside. Even today, wheat did turn up to 20 higher at one time and corn was at 1-2 higher. It's still going to be a little bit of a separate player, and that spread between corn and wheat is actually still fairly wide right now as we go look at those further out months. So we got to kind of keep an eye on that side of it. But, the whole talk with the Ukraine, Russia's just got a lot of wheat. Now, with some of the weakness that we've seen this week is the fact that they're talking about releasing their export quotas. They got a lot of bushels that they want to move. For them, even from the strategic standpoint of moving product, not having the Ukraine deal probably helps in that regard so they can move their product. So we'll have to just kind of watch how it goes. To me, the wheat market, we'll have to see. We've come through a series now about 6-7 times in a row. We put in a higher high. went and tested support, rallied back out again, put a new high in. If we can't come back and take out that high from a couple days ago, that might tell me that wheat market's going to start rounding over and maybe getting tired. Feels like to me we got more sideways trade maybe starting to build there, barring some news. And that might just keep the grain markets here in this window. We're at a spot in most of these grains, especially corn and wheat, where if we go too much higher, we lose the demand. If we go too much lower, it becomes a value. Henceforth, the market doesn't really go anywhere.
John Heinberg with Total Farm Marketing is our guest today here on Market Talk. John, let's move over to the livestock trade. You and I were talking off air a little bit about this cattle market. Feedlot activity has been pretty slow to go here this week. Some activity picked up Thursday. Looking at that choice select spread, though, still really wide. What are your thoughts of this cattle market and just kind of the overall tone that you see there this week?
We did see a little cash trade start coming in today, a little bit firmer again than last week. So that gives us some support in that front month contract. October is pretty much tied to cash right now in terms of where it wants to go, especially as we get pretty late in the life of that contract. Then we still saw some weakness on the backside. The biggest reason I think we're a little concerned there, we're watching the packer margins. They're starting to really tighten up here to the point that they might be on the red. And if that's the case, that might slow those cash bids down. But like you brought up, that choice select spread is extremely wide, trading over $30 between the two. That's a reflection of the demand for quality beef that's out there. That's what's keeping these packers at least bidding here, is the price that they can get for that choice product or the prime product. And that's also might be a sign that our lots are getting fairly, current in terms of their cut. So, those things are still factors going forward that can be supportive of this market. Now, I think in December, maybe we get a little bit flat here going into the end of the year just because of that concern on those packer margins. That prices might just have a real hard time finding some more legs again, less cash were to really kick in. But if the packers start feeling a little bit of a pinch, which will keep those bids down. So at least still like the cattle market, still going to be well supported in here. I think we're kind of through our worst of the case in terms of the sell-off. We saw the funds really liquidate a lot of the livestock positions over the last couple of weeks. Last week alone on the commitment of traders, a combination of feeder cattle, live cattle, and hog selling was the fourth largest in history in terms of a 1 week total. So that just tells you where the money flow was. It feels like that money is at least starting to turn around in all three of those markets.
John, over on the hog side, not a whole lot going on there Thursday. I know October pretty much in line with cash in the final couple days here, that contract. Any thoughts in this hog trade here as we wrap up the week?
I'm curious to see what's going to happen with December when we get October out of the way here tomorrow afternoon and let that December become the new lead month next week. We got a pretty big discrepancy to the cash index. Does December come up? Does the index come down? That'll be a thing I'll be watching very closely. We've had these kind of gaps before, and we've seen some good movement, to tighten that gap up on the futures. Again, biggest thing we're still watching there is what's going on with the demand side of the equation. I'm curious what export sales numbers are going to look like tomorrow for pork. Chinese pork prices have been on a strong climb here, especially since the end of their holiday here at the first of the month. They've been on a climb even through that window. China's going to be looking to pick up some pork. That could be something we need to watch in those export sales numbers, because demand right now on the export front has definitely been lacking. Hog numbers are down slightly from last year. Slaughter weights are, down slightly from last year, but the demand is also there, and that's what's kind of causing the pile to build up in terms of pork products. So we need to see if we can get some demand going. I think that can lift this market into the end of the year.
John, as well, before we let you go, dairy market, how do you see things shaping up there as we near the end of the week?
We've had a really good run in the cheese market. Seems to be starting to tail off a little bit here now. Maybe we're getting through that fall demand that kicked in with the football season. We'll have a little bit of a gap, and then we'll start talking holiday demand. Milk looks like it's pretty range bound. 21 plus on the top, 20 on the bottom, trying to hold those windows right now. The one that's really been kind of disappointing has been the drop in price in terms of butter. That was at record highs. So that's going to come off those highs a little bit here too. So maybe we're seeing a little bit of domestic demand starting to slow down. But even though the export demand is still holding this market up. So again, choppy trade, mostly sideways. We basically have been building that here now for the last couple of months. Just feels like it's pretty range bound, but still really good value for producers to make sure you're taking advantage of the top side of that range.
Well, John, great stuff as always. Before we let you go, final thoughts, anything else you want to mention here or reiterate before we run out of time today?
I know producers are busy, combines are rolling, a lot of things in front of you at this time frame, but don't forget about the marketing side. Keep it on the radar here. Again, great value. We've mentioned that multiple times. The thought of having $7 corn on the board here at harvest, $14 beans at harvest, that just sounds really good price levels that can go away. Okay, the funds are long on corn, long on beans. If they decide to do a liquidation phase like we saw in the livestock market, prices could come down regardless of the fundamentals. Protect. Make sure that floor is under that bin. So I'd rather watch puts go worthless than watch the value of your crops disappear.
Well, John, if producers need some advice, they want to reach out to you and the team at Total Farm Marketing, what is the easiest way to do that? I know you guys have a lot of great ways to get in touch.
Sure. Love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Don't forget about our website, totalfarmmarketing.com. You'll see our list of advisors on the information, as well as just a lot of stuff there for producers to take advantage of. I know times are busy. It doesn't cost anything to pick up the phone and ask questions.
John, thanks for the time. As always, enjoy the rest of your week and weekend, sir. We'll talk to you next week. Have a good one.
Sounds good. Have a good weekend.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.